He's the entrepreneur and founder behind two companies that deal in yellow metals. Amir Adnani is the CEO of Uranium Energy and Brazil Resources, dealing in gold and uranium. He does both. Amir Adnani, welcome back to the show. Thanks for being on with us.
Yeah, it's great to be back with you. Last time was at the PDAC in Toronto.
Absolutely, good memory. And now we're at Freedom Fest here in Vegas. You're obviously an expert in gold and uranium. We're going to talk about both today. Let's start by looking at sentiment here at the show. I remember 2 years ago when I was here, it was quite bearish. What are you feeling from the audience here?
It's night and day. I mean, the world has really changed. And we've never seen an environment like this before. It's unprecedented to see the trillions of dollars of government debt that is yielding negative interest rate. This is a real issue, and the uncertainty around it is, again, something we've never seen in the world before. Bank of England put out this note talking about how the interest rates right now are at the lowest point in 5,000 years. Forget about 10 years. This is uncharted territory. And then you add on top of that the uncertainties around what has happened now with Brexit.
Yeah.
And so we are in such a difficult environment out there. And I think the enthusiasm around why people are looking at gold, I've just never seen it like this before.
Well, last time we spoke, I like the quote you said, gold was the ultimate anti-establishment trade. You're sticking to that? You still see it that way?
Yeah, I still see interesting parallels with that and meaningful ones. Again, and Brexit being a good example of that. I mean, Brexit in a way was an anti-establishment vote. And in a way, it did have a heck of an impact on gold. And in a way, it really has brought to the forefront what gold can do in all of our portfolios as insurance. Remember that Friday, right after Thursday Brexit vote?
Absolutely.
Everything was red. Everything in our portfolio was
48 hours straight covering that. It was crazy.
And the only thing green, the only thing up was gold. And so I think it was the ultimate reminder to investors about the role gold plays as insurance, as alternative currency, as a store of value, and wealth preservation and creation. So it's incredible to see these things unfold live in front of us.
So you think we're, from what you're saying, in a bull market here for gold?
I don't think this is a bull market at all. I think this is a market that's recovering. I think the bull market is coming.
Okay.
Because I just think, look, when...
So we haven't started the bull market yet for
I
gold.
really don't think so. I mean, look, let's look at it this way. When gold was at 1900 in 2011 and started to trend down, by the time it arrived at 1330, no one was excited about that. It's just that it seems like it's a bull market now because we were at 1100. But the point is, I really believe this is a market that is improving for gold, and whether it's about 1400, 1500, or retesting the $1,900 level, I think this is an improving market for gold. I don't think we're anywhere near the bull market yet.
Let's switch gears now. Let's look at uranium. How do you see the state of uranium right now? Still in a bear market?
Yeah, very difficult. Full bear market. I mean, painful. I was with you at PDAC. Uranium was at $35 a pound at the time. Literally within a week of us doing that interview, uranium started to go down. It's currently at about $26 a pound. That's a 10-year low for uranium. And since our last interview, a number of additional mines have been shut down in the uranium space. So supply continues to really get smaller and contract. And the demand side of the equation does continue to grow. So uranium is in a very difficult environment right now. It's the ultimate contrarian play. And it couldn't be any different than what gold is doing.
Obviously, I know you're the CEO of a uranium company, but do you think investors should be buying this as a buying opportunity then for uranium?
This to me could be the opportunity of really over the last decade in the commodity business, in the sense that uranium is not down because of demand weakness. Demand for uranium couldn't be stronger today. And we've had this issue with Japan 5 years ago that has created an oversupply in the market, but that is starting to improve. And so the fundamentals are some of the best we have seen in a long time, yet the price is depressed. It's a thinly traded commodity. It's not going to stay like that for too long.
That was my next question. Do you think it's the Japanese dark cloud still hovering over uranium, or what's the main challenge for the uranium sector? What needs to happen for it to really take off here?
I think you hit the nail on the head with Japan. If I look back at reports from 3 years ago, the industry was expecting to have about maybe 20 reactors online by now.
Yeah.
And we only have 4. So clearly, Japan has taken longer to come back online. So yes, the velocity of recovery has been disappointing, but it's heading in the right direction. And that overhang will clear. And when it does, we're going to see a sector that can move very quickly. The combined market cap of all listed uranium companies today is less than $8 billion. That's 20% of barren gold, for crying out loud. So investment community has so few and limited ways to play the sector. And that in a way is very exciting as well when you think about what can happen and how quickly things can move when the sector comes back into favor.
All right, Amir, I know you've been struggling with your voice, so I appreciate you coming on. Thanks so much, and I hope you feel better. And thanks for watching our coverage here from Freedom Fest. We'll have more for you on Kitco.com, so be sure to stay tuned. Thanks for watching.